on a map. This is Ron Costa broadcasting live from the Mappable USA studios here in Las Vegas, Nevada. And today, folks, we're going to talk about a really interesting subject. We're going to talk about shared value investing. We're going to go into pledges, all kinds of great things with opportunity zones. So let's bring in Vicki Hutchins from the QOZ Marketplace and the Opportunity Zones Authority. Vicki, how's it going today?
Outstanding. Like I say every time, Ron, great day in Vegas, which makes me happy and which gives me an excellent day. And looking forward to our podcast today. We have a very nice guest who's going to talk about investing in a different way and opportunity zones and how he managed them from a different point of view. So let's go.
Yeah, he's got a lot of really interesting projects going on, so let's waste no more time. Let's bring in Bob Hutchins. Bob is the CEO of the Ellavoz Impact Capital and the managing director of the Illinois Opportunity Zone Funds. Bob, how are you doing today?
Very good, thank you, and thank you for inviting me on your podcast.
Absolutely. We came across you as an Opportunity Zone Fund, and got a little bit of background on you. We thought it would be a great addition to the show, and especially since you're on the East Coast, right? What are you, in Atlantic City? Is that right?
Oh, I'm actually on the Jersey Shore here near Spring Lake, about an hour north of Atlantic City, closer to Asbury Park, the home of Bruce Springsteen and John Bon Jovi.
Love that area very well. Exactly, brings back a lot of memories with those old Springsteen tunes, and it's great stuff. And everyone loves that area in the Jersey Shore too. So, why don't you, before we get into this whole Opportunity Zone stuff and what you're doing, why don't you give us a little bit of a background about you and how you got started in this and how you got to be where you are right now?
Certainly, thank you. Well, I started my career with Price Waterhouse, which is one of the larger the global CPA firms. And after I left Price Waterhouse, I opened up my own firm, built that up, and had a lot of experience in both in the private sector, in government sector, and nonprofit sector. Subsequently sold my practice to a large CPA firm, retired from public accounting with the ambition to start a social impact private equity firm. And that's where we are here with Ellavoz Impact Capital. My background of 40 years in public accounting, working with a variety of businesses across the board, government agencies, and not-for-profits, gave me insight into the strengths and weaknesses of each of those sectors. And so the Ellavoz Impact Capital, which is the management company for the Ellavoz family of funds. They include the Ellavoz Shared Values Opportunity Fund 1, 2, and 3, which is our third fund, and multi-asset fund is launching this month, as well as the Ellavoz Neighborhood Homes Fund, which is a non-opportunity fund focusing on distressed communities, the same distressed communities that we are investing in our opportunity funds. So we have a strategy for a 10-year community development growth, and that's part of our investment strategy. Right.
Okay, so you're looking at this, you're calling it social impact investing. Is that right? That's kind of like the umbrella term?
Yeah, impact investing. We are more specific. We are our discipline is shared values investing, and let me give you a little history because it is kind of interesting how investing has gone. We started out with what people called SRI, socially responsible investing, which was really more of a marketing-driven kind of feel-good thing. Don't buy cigarette companies. That morphed to a more defined and broader ESG, environmental, social, and governance. Environmental is obvious, don't support fossil fuels. Governance is a little hard to understand. Social is really hard to execute. So ESG, while it really turned out to be more of a risk management tool, more than a positive social impact action tool. We then proceeded to impact investing, which is really indirect social impact. You invest in an impact investing fund, and if there's any impact whatsoever, they will invest for you. We take it a little bit further, and we want to do direct social impact, where we measure from a quantitative, a qualitative, and in fact even narrative reporting standpoint, what is the direct social impact that is being done with your investments. We patterned our investment strategy after Dr. Michael Porter strategic essays on shared values investing. So what we do different than just impact investing is we have a strategy for redeveloping communities, and we put together both opportunity funds and non-opportunity funds working together, investing together to benefit our investors as well as communities.
So when you're working with nonprofits in your shared value investing concept, does that mean that you're stacking your opportunity zone funds with grants or donations or funds available through government entities to work together with your opportunity zone fund in New Jersey?
Absolutely. That's a great question, Vicki. Within the three sectors, government, not-for-profit, and the private sector, first we did an analysis, and government has all the tools for community development, in particular affordable housing. Those tools being in the form of tax credits, community development block grants, tax incentives such as Section 1400Z, which is the opportunity zone incentives. The not-for-profit sector has highly motivated, highly competent professionals who are mission-driven toward a goal, in this case, affordable housing and community development. They simply are underfunded. And so it stunts their ability to really scale up to the level of productivity that's needed to regain our communities. The private sector has too much capital and is chasing investments that are in our mind are not as good as where capital should flow, and are often being invested in high fees, non-transparent, and often conflict of interest investments in the private equity sector. What we provide is a transparent, low-fee, no carried interest, direct investment into communities. We do that by a public-private partnership. Our unique public-private partnership with New Jersey Community Capital, which is a community development financing institution and the largest in New Jersey, one of the largest around the country, actually, and Community Asset Preservation Corporation, which is a not-for-profit affordable housing developer. And they are the largest in New Jersey and one of the larger in the country. We allow social impact investors to actively participate in community development and earn market returns. We are not just I'm sorry, go ahead.
I was going to just interrupt you really quickly. As far as you mentioned before, how you're monitoring this and you're coming up with equations and data to see that all this is working. Is this the kind of data that you guys are creating yourself, or do you have a third party that comes in and says, okay, well, this investment's working and this investment isn't, or this is the return from this?
Well, we have actually three levels of due diligence here. The first level is our our not-for-profit developer is not going to commence a deal unless it's feasible, because their entire organization depends on the success of it. In fact, if our not-for-profit affordable housing developer has a 5-year track record of annual return of 28% on acquisition, rehab, or construction and sale at affordable prices. They've done 1,200 units over the last 5 years. Our goal is to scale that to 1,200 units a year for the next 5 years and create 6,000 units of affordable housing.
Yeah,
and you have to really pay attention to your due diligence to make sure that whatever project you settle on and whatever project you develop is going to be successful, not just today or 6 months, but still going to be successful in 5 years or 10 years, the term of the Opportunity Zone Fund. And without the due diligence, you kind of shoot yourself in the foot.
Right. Well, what we wind up doing is, and we are involved at every stage. So our builder client is involved in the feasibility, and we work with them and our CDFI client partner, in obtaining all of the tax benefits, tax credits, and other non-dilutable capital in the capital stock. For instance, in our Fund 1, which was about a $22.3 million project, $7.8 million came from dollars and grants and tax credits that were undilutable to the actual investor monies. So we have a tremendous advantage in the amount of subsidies that we get to do these deals. In addition, our partners are programmatic in their business or organization, in that they work not for profit or not at market rates, but everything is programmatic to their mission.
Right.
So we have our feasibility of a project starts at the very beginning. All three of us are involved in that. Our CDFI partner, which is essentially a not-for-profit bank, then looks at it from the lending standpoint, collateral, etc. And then I look at it, or we look at it, from an investment standpoint. In addition to being a certified public accountant, I'm a member of the National Association of Certified Valuation Analysts, and so my career did a lot of private equity valuation work over about a 20-year period. So I'm able to get involved, we are all able to get involved in these projects from day one. We build models that create a very attractive, low-risk investment class for the private sector, and it's built into the cost of the project. So we're not investing blindly at all. In fact, we're creating the investment return along with a preferred distribution coming first, based on the economics of the project from the beginning. And we will not acquire a project if it doesn't meet our shared values investment strategy that gives our investors both a positive social impact return and market rate return on their investment.
So when you're affordable housing, does that cover the gamut of single-family, multifamily, student housing, or do you focus on one type of housing? And are you strictly in New Jersey, or are you expanding outside of New Jersey or into other sectors besides affordable housing?
Our focus is affordable housing because that's where the need is the greatest. I've been in a number of different businesses. I've co-founded technology companies, mobile health companies. I've been involved in angel investing. And in Economics 101, you always want to be in the business of where you have the demand is 10 times the supply. Affordable housing is so underserved right now, and the need is only getting greater. So we are concentrating on affordable housing. We think that's the best sector to be in over the next decade. But with that, we are also concerned about economic development, and we will be investing within our funds 3 and 4 up to, but not more than 10% in economic development within the same communities that we're investing in affordable housing. We also include workforce housing. Our Newark project is a good example. That's workforce housing. And it also includes 3 floors of residential workforce housing, and the 2 bottom floors are an arts studio, coffee shop, a glass blowing factory, educational facilities, and it's in the Newark, New Jersey Arts District. So it's a really cool project. It's the old St. Michael's Hospital, which is across the street from the new St. Michael's Hospital, and we're extremely proud to be a part of that because the healthcare workers and essential workers that protected us and are still protecting us during this pandemic will have a quality and affordable place to live when we finish and cut the ribbon in February.
Yeah, it goes hand in hand, that affordable housing is necessary for people to be able to afford to live, but they also have to have jobs to be able to afford to live in the nice developments that you're doing. So it's kind of a chicken-egg kind of thing where you need both of them to sustain both of them into the future, which is something that the Opportunity Zone program is all about. Elevating
Absolutely.
The lives of the people that live in the community, be it housing or economic development, business development, to create the jobs for the people that are looking for the affordable housing. So you're covering everything there.
Yes, absolutely. We think a home is basic for obtaining all the other human needs, healthcare, education, and economic opportunity, which is directly what you're thinking about. If a person has a safe home, they're healthier. If they have if they live in a home that, like for instance, an apartment building that has Wi-Fi and computer labs, their education is more available. For instance, we're looking at a project that we've committed to invest in, and we want to put a computer lab with Wi-Fi throughout the building so that the children will not be in a disadvantage to to their other students in their classrooms. Then what we're going to do is partner with local boots on the ground not-for-profits that will help them learn technology so that they can, right within the structure of their building, get additional tutoring and technology and access to technology that they may not be able to afford elsewhere. With that comes economic opportunity when you have educational success. Direct economic opportunity is a hard one to fix, and we are working on that. We're partnering with, we see a potential partnership with a veterans entrepreneurship group to provide them with the ability to do rehabs. We're talking with specialized SBIC, that's a small business investment company, to perhaps invest in that with them to fund both debt and finance and equity financing for growth potential businesses in these areas. And so you're absolutely right. You have to figure in economic opportunities if you're going to really redevelop a community.
Right.
Yeah. And let's get back to these funds a little bit. I have a couple of questions on your funds. Your Fund 1, 2, and 3. These are separate projects that you create a separate fund for, right? So if an investor invests in your number one fund, they're not touching on properties in number two or number three. Is that the way you have it set up?
Right. Fund 1 is a single asset fund. Fund 2 is also a single asset fund, but the interesting part of Fund 2 is that we acquired what we would call a platform property, and then we're going to acquire probably another, there's about 13 more buildings around that we're going to acquire inside Fund 3 in the future. And then Fund 4, which is not an opportunity zone fund, will be acquiring single-family units surrounding the Fund 2 and 3 properties that we intend to acquire, rehab, or construct and sell at affordable rates. Our strategy is that if the east side of Main Street is an opportunity zone and the west side isn't, by developing the west side as well as the east side will greatly increase the value of our 10-year hold investment in the opportunity zones, and since that will offer our investors greater capital gain on the sale at the end of 10 years, which will be completely tax-free, that we're helping both of our funds appreciate and do better.
Yeah, the tax-free end game of these opportunity zone funds are really just fantastic. That's one of the best things about this, I think. Incredible.
Oh, that's the big win from, I've counseled a lot of high net worth individuals, family offices on income and estate tax planning. And so one of the value adds that we bring to our investors, angel investors, is the ability to counsel with them and their outside CPAs and outside attorneys on the specific ways that we can use opportunity funds in their estate planning, income tax planning, etc.
Yeah.
I was a tax partner, so
right.
I know what
and
it's
tell
about.
us, as a CPA and everything, how easy was it to create the opportunity zone, the entity itself, the fund?
It wasn't that difficult because I lived with it. I spent a year working on them. I started funds in Buffalo. I started another fund down here while I was still, let's say, in the planning stage. And then while I was working on forming this partnership with my two not-for-profit partners to elevate us to a whole new asset class. So I was pretty much of an opportunity zone geek from the time the law first came out.
Yeah, let me guess. You did all this work with Bruce Springsteen music in the background, right?
A little bit, yeah. A little, sure. Mary's Place.
Whatever it takes.
Exactly. That's right. Hey,
Freehold. By the way, Freehold has a number of opportunity zones, and that's where he grew up. And Asbury Park has about 5 opportunity zone census tracts in Asbury Park,
there you go.
including the Stone Pony. Including the Stone Pony is in an opportunity zone.
Is that something or what, boy? All you got to do is name your road Thunder Road. You're all set with that. So that's good. But anyway, I want to get one more thing. Talk about this Impact Angel Network that you've created. I saw that on your website. That's separate from these funds that we're talking about. Is that right? Tell us all about what you guys got going on with that.
What it is it's an investing club or network similar to an angel network, whose interest, our Impact Angel Network are people like myself and my partners who have a real interest in making leaving a legacy of direct social impact investing. People who have been successful in life and now say, all right, what's my legacy? Is my legacy I just made a lot of money right till the day I die? Or is my legacy I look around and during these troubled times in my country, am I willing to use my expertise, my capital, and make a positive difference. What is it that I want my grandchildren to remember about me? Is it that I made a lot of money and I lived well, or is it that I shared some of what I made and I invested it in communities to make other people's lives better? And that's what shared value investing is all about. We have some interesting ideas about how we would like to see all accredited investors allocate 5% of their portfolios to shared value investing. There is currently in this country about 12 million accredited investors, and they're holding $66 trillion of investment capital. If they put 5% of that into shared value impact investments, which are every bit as powerful investments as anything else they're doing, there would be $3.3 trillion of private capital going into community development. That amount of capital going into community development would essentially correct America. It would give economic opportunity, all the jobs that would be created by going in and doing this work. Housing is going to bring back this economy. There's a tremendous need for housing, and our 5% pledge is a movement that we're hoping will catch fire. That shared values investing is a separate asset class. And when you talk to your investment advisor and he lays out an allocation, there's a 5% space there for impact investing. And we don't want all of it. You don't have to necessarily invest $3 trillion with us, but we're hoping that we get a little bit of that, and we're hoping that every investment advisor in this country will coach their clients in the impact, the powerful impact that we can have on this country and on people's lives if we just simply allocate 5% of our vast net worth to social impact investing.
Yeah, and like you said, it's not just local to where you are in Jersey. This is a nationwide opportunity, a nationwide pledge, really. If you can get it all across the United States, then that is going to be what brings everything back. And for 5%, that's pretty good, I think. And the numbers you just mentioned as far as how much money is on the sidelines with accredited investors is staggering, actually. That really is an amazing number.
Oh, yeah, it is. We'll be doing our initial projects are in New Jersey, Florida, and New York, and we'll be branching out into Ohio, Maryland, North Carolina. We'll be big in Florida, New Jersey and Florida right off the bat, but New York also, and then Ohio, Maryland, North Carolina. I've spoken to towns in South Carolina. I get calls across the country. So there's a real movement going on right now to talk about this, but we need action. And so the 5% pledge, Take the 5% pledge, is a movement that we're hoping can catch on social media, will be something that can be discussed in investment roundtables. I'd like to see it discussed on CNBC and other platforms where it can get legs. So that's our calling. That's our mission.
Yeah, well, we'll certainly help you. Yeah, we'll help you promote that. That's a great cause, great idea, et cetera. You mentioned all these different places that you're looking to move into with these projects. How are you finding these projects? Are they coming to you, or are you through your network and all these years of working, or how is that happening?
Projects come to us through our not-for-profit partners who are partners with other not-for-profits, are preferred acquirers from government agencies. There's so many communities across this country who were once beautiful communities, and they fell into disarray. And the only thing that's common about them is their income levels, is their poverty levels. But, I can tell you, I've walked the streets of North Camden. It's a beautiful area with beautiful homes and architecture. There's flower boxes outside. If we could rebuild that community, it would be a renaissance for middle-income people, affordable housing. We don't need to actually rebuild, start from scratch. We have wonderful neighborhoods that just need to be rehabilitated. And so we're focusing on that. And most of the government agencies and a lot of the affordable housing not-for-profits are looking for our type of capital to come in and to make a serious commitment, long-term commitment to rebuild these communities. So we really do have a very large pipeline.
You do, and Bob, what I really like about what you're doing at Ellavoz is it seems like you have a vehicle for just about everybody. If you want an opportunity zone fund, if you have the fund there, if you want to do impact, you have the impact fund, and you have all these different options for investors, which is great. And you have the background to make it all successful. If you got investors right now listening to this podcast, how would they contact you? What's the best way to get more information, or your websites, or how can someone do that?
Sure. Our website is Ellavoz, ELLAOV, ELLAVOZ, Ellavoz.com. Yep. Feel free to call me directly. My cell number is 908-330-2029. I urge you to look at our Ellavoz.com website, watch the video. It's for a lot of fun, and I'm available to talk to potential investors 24/7. This is our mission: is to rebuild America and to make it better. I'm going to link all this stuff in the show notes after this is over too. And Vicki, that we have the Ellavoz fund listed on the QOZmarketplace.com, right? Did you know that?
Absolutely. Yes. As every Opportunity Zone fund, new and old, should be listed on the QOZ Marketplace for sure.
Yeah, we just haven't put up that 5% pledge. So we got to do a whole thing on the 5% pledge. I think that's a great idea. Bob, you nailed it with that. Yeah. That's amazing. Amazing idea.
Sure.
So
that would be great.
Yep. So before we close this out, Vicki, do you have any final questions or thoughts about this, or what do you think?
Well, allow me to step on my soapbox for a minute here and say that I think the genius of the Opportunity Zone Fund or the Opportunity Zone program was planting a seed to people who can invest in that feel-good opportunity so that you can drive down the street and you can say, I contributed to that new community. I contributed to the betterment of the residents who live there, and you actually see something tangible that you were able to participate. And I think, Bob, with your Ellavoz funds, you have provided the opportunity for people to make it easy to do that, to make it easy to invest that 5%, to make things successful for the communities that you're working in, and also to show and teach their children the same thing so that it continues forward into the future where you have more people and it just becomes an automatic, natural thing to invest in your fellow man and your community and make it better, make the world better, and this is a fabulous thing about what you've done, Bob, and I commend you for having a 360-degree vision and understanding that everything is relative and what you're doing impacts everything, and you've made it easy to do. So congratulations to you. Thank you very much. I appreciate that. Thank you.
Bob, do you want a video of what Vicki just said? To transcribe that? Oh, man. Bob, listen, I know you're really busy and everything. I really want to thank you for taking the time out today to talk to our audience about your funds, everything you're doing. It was really great information, and hope to have you on again as news progresses and you guys got more stuff going on. So thank you very much.
I would love to do it. I would love to be on again. Thank you so much, and I appreciate your inviting me.
Great.
Thank you, Bob. It was great.
And everybody out there, you're listening to the Mappable USA podcast at mappableusa.com. If you go to that website, you'll see all our syndication sources on the homepage. Just scroll down, click the one you like best, and you'll never miss another one of our podcasts. In addition, if you want to be a guest on the show like Bob was today, there's a guest tab there. Just fill that out. We'll see what we can do about getting you on the show. If you like what you heard, send us an email, info@mappable.com, I should say, or just leave a comment on the page that you're listening to this right now. We really appreciate all your support. Thanks for listening. And everyone out there, have a great week. We'll be at you next time with another Mappable USA podcast. Have a great week, everyone.